You know, something pretty remarkable is happening in the New Zealand economy right now. After a really tough stretch, business optimism isn't just creeping up, it's absolutely surging. Today, we're going to break down what's behind this huge wave of confidence and what it really means for the future. Let's dive in.
So, just how positive are we talking about here? Is this just a little blip on the radar, or is it something, well, something much bigger?
11 years. Yeah, that's right. Business confidence is at its highest point in over a decade. I mean, just think about that for a second. After all the economic ups and downs we've seen, we've just hit a brand new peak of optimism. To put a hard number on it, the latest ANZ Business Outlook survey shows that headline confidence has soared 9 points to a net 67%. That is by far the strongest, most optimistic result we have seen since 2014. It's a massive jump.
But, as impressive as that big headline number is, economists, they always look a layer deeper to find the real story. So what are the indicators they're actually watching?
Well, it turns out there's a more specific, and you could argue more important, measure that gives us a much clearer picture of what businesses are actually planning to do next. It's something called expected own activity, and this distinction is absolutely crucial. See, it's not just about how a business feels about the general economy out there. It's about their confidence in their own performance, their own trading conditions. And that, right there, is a much better predictor of whether they're actually going to invest and hire people. And guess what? This key metric has also surged, jumping 8 points to a net 53%. That's its highest level in over 10 years. So the real takeaway here is that this isn't just some vague optimism. It's real confidence in their own bottom line. So here you can see the two key figures side by side. You've got that massive 67% headline confidence right next to the incredibly strong 53% for their own activity. Both are pointing firmly up, telling a really consistent story of recovery. So where is all this growth coming from? Okay, so we know businesses are feeling good, but is this feeling spread out evenly, or is it just concentrated in a few spots? Let's break down where this new wave of optimism is actually coming from. And here's the thing. This confidence is being built on a really solid foundation. Reported past activity, what's already happened, has lifted across almost every single sector. This means businesses aren't just hoping for a better future, they've already experienced a better recent past. The only real exception is construction, but hey, even that sector is improving from its previous lows. And you don't have to take my word for it. ANZ's chief economist, Sharon Zollner, she put it perfectly. She said green shoots are looking well established. And she really emphasizes that businesses are experiencing better activity, not just hoping for it. That is such a critical difference. And if we look at the map, we can see the recovery is pretty broad, though not perfectly even. Wellington is still the weakest region, but it is improving. And at the same time, we're seeing these really notable gains in economic powerhouses like Auckland and right across the South Island outside of Canterbury. The momentum is definitely widespread. Of course, whenever you see stronger economic activity like this, the big question that always follows is about inflation. Is all this growth coming at a cost? And what does it mean for interest rates? But 1 year ahead inflation expectations are holding pretty steady at 2.69%. Now that number is really important because it's right near the top of the Reserve Bank's target range, which is between 1 and 3%. And the direct consequence of that is pretty clear. With inflation in check but still firm, and the economy picking up steam, well, the Reserve Bank has very little reason to cut the official cash rate. So for all of us, that means interest rates are likely going to hold steady for the foreseeable future. But when you dig into the details, you see this really fascinating little push and pull happening. On one hand, fewer businesses are expecting their own costs to go up, which is great news. But on the other hand, more businesses are expecting to raise their own selling prices. It's a bit of a mixed signal, and you can bet the Reserve Bank is watching that very, very carefully. So let's pull all these different threads together. We've seen this huge surge in confidence, and it's backed up by real activity. What does the final outlook tell us about New Zealand's economy? So to recap, we've got business confidence at an 11-year high. We've got stronger activity that's already happened and is expected to keep going. This improvement is happening across most sectors and most regions, and inflation expectations seem pretty stable. Honestly, the picture is overwhelmingly positive right now. The evidence is pretty clear. The green shoots of recovery are well and truly established. But that leaves us with the final and most crucial question. What's it going to take for these promising shoots to grow and fully bloom into sustained, long-term economic strength? Well, that is the challenge ahead.